Hey everybody, welcome to today's video. In today's video, we are going to go over how to professionally draw support and resistance zones. As I've been asking in the past, what content would you like me to present? This was the most requested, so I'm going to do it today. So if that sounds interesting, please do stick with us until the end. Don't forget to subscribe. Turn on the bell notification so that you'll be notified whenever we release content like this, as we do so on a daily basis. And share with a few friends that you believe the video will be of value to them. In front of us is DXY. It's dropping like crazy, man. Like, sheesh. We did take a trade on GU based off the DXY. I did anticipate prices to keep on falling, obviously. Let's see how it's playing out. Okay, so it's still kind of in profits, I guess. This is gold. Shit. GU. Okay, so it's still in profits, but anyway, let's see how to keep on playing out. I did share this in all of my platforms, including the free Telegram group. If you're not in it, be sure to subscribe. The link is in the description because you don't want to miss out good looking trades like this one in the future. Now, let's get to drawing zones. I'm going to use a chart that I never use. I never use the Asian pairs, like the New Zealand US dollar. So I think I'm going to use that. New Zealand USD. Oof, look at this baby fly. Like DXY is dropping. I don't know why GU is low like that. We should have taken another trade. But anyways, it is what it is. Let's remove all drawings. DXY is dropping. GU is just slow. I'm angry with it. And I'm just joking. Trades can't pull out my emotions like that. Can't afford to do that. So, okay. Now, what are support and resistance zones, right? Obviously, we know as price action traders, we mostly use market structures, right? Now, there are two types of market structures. Market structures are just places where markets actually find some kind of reaction to it, either in a bullish direction or a bearish direction. So, for instance, there are two types of market structures. We have support market structures and resistance market structures, right? So on support market structures, here it's when prices are above the market structures. Like for instance, when prices are above here, maybe they're dancing somewhere up here. The market structure below it is called a support market structure, while the market structure above it is called a resistance market structure. So let me put that down. Support market structure, right? And then up here, we have a resistance market structure. Right. Now, they are called support and resistance market structures due to the way they react to the market. Most of the times when prices come down here and they find this market structure that, the market structures are below it, the market structures are above this market structure. When prices reach here on these support market structures, most of the time this market structure acts as a support and it supports the prices to actually go higher. On the other side, when the prices reach on this resistance market structure and they reach here, they find some kind of difficulty to keep on going higher. That means they're resisted from going any higher. That's why it's called a resistance market structure. And most of the times, prices go lower. So that's the main characteristics of, support and resistance market structures. Support market structures support prices to go higher. Resistance market structures actually resist prices from going any further and they just push them lower, right? So those are the two main differences in characteristics of the support and resistance market structures. Now, how do you professionally draw these support and resistance market structures, right? So before I start teaching you, you need to understand like it's a journey You're not going to get it right the first time. You're not going to get it right the second time. It takes practice, and with time, you'll get better at it. So don't beat yourself up if you can't draw market structures on point at the first go that you have at it, right? Give yourself time, practice, and then as you keep on doing that, you'll get better with it over time. Now, when it comes to support and resistance market structures, first thing you need to understand, it's not a line, it's not a point, it's a zone, right? So for instance, with support and resistance, for those that have been using price action since way back, you all can remember there was a time when people were drawing support and resistance like this. A person comes on the market, he draws a support and resistance like this. Pop, he's done. And then over time, as time moved on, we actually realized it's not just a line, it's actually a zone. So we actually started drawing zones like that. And this actually made more sense because it's actually a zone, it's not a line, right? So first you need to understand the support and resistance, they are not lines, they are zones. Obviously, sometimes in the markets, you can actually draw lines, like the one you see here on GU, the one that we took the trade off. You see here, we just drew a line. Right here, we just drew a line. And then once prices got rejected off it, we took the trade, which went all the way in profits. But that doesn't give us, the right to say that it's always going to be a line. Obviously, sometimes it's a zone. As you see here, it's a zone. Now, how do you draw these support and resistance zones? First, you need to always look at the most recent turning points. Like for instance, this here and this here. These are the most recent turning points. Like you shouldn't be blinded with these, right? Because some people will try to force the zone, will try to force it like that. No, don't do something like this. Always look at the most recent turning points, which is something like this. These are the ones you need to be looking at, because these are the ones that are giving you the latest data with what's going on in the market. Because when it comes to support and resistance, what you need to understand is that it's always changing. It's not a stagnant point. Like for instance, let's look at here. There was a time this was the support and resistance. Like this was the resistance, this was the support. This became the support. And then you can see just moved slightly higher. This became the support. And then it moved slightly higher. This became the support. Now, if you draw a support right down here, if you're still holding on to the past data and drawing supports maybe down here saying this was the oldest or this is the most recent support, if you draw support here, you'll obviously be left by trades like this because you won't see prices coming to retest your support structure because it won't be reached. So what you need to do is always be evolving with the market. Understand that support and resistance levels, they're always evolving, they're always shifting. Same thing applies. This was a support example. Look at here. This is a resistance example. This was the most recent structure. This was the most recent resistance until somewhere here. And then what happened? Prices changed. Prices moved higher. This became the resistance, right? So if we pull it all the way until back up here, you can see that became the new resistance, right? And then prices again moved higher. So it's always evolving. You can't always be drawing to where prices, were. You need to draw to where prices are, giving you the most accurate and latest data. When it comes to support and resistance, look at the most recent turning points and then draw your support and resistance from that point, right? That's something that you need to always be remembering and always considering. Now, another thing that you need to be looking at and really considering when drawing a support and resistance is how do you actually draw it? Yes, it's a turning point. Yes, it's the most recent point. The characteristic, yada, yada, yada. But how do you actually draw the support and resistance? I believe that's the most important thing. So I'm going to use this as an example because it's the one that actually is the best, but don't really draw it here because prices are very evolved. But I'm going to use this just for example to illustrate. Now, when it comes to support and resistance drawing, you need to just cover the wicks. Like for instance, here you see this, you need to cover that. And then just pull out your zone like that. Don't cover the body, cover the wicks. And the reason for that is because you want to cover only the sensitive area in the market. Because what do you want? Why do you actually draw? That comes back to why you actually draw support and resistance in the first place. And the reason for that is because once prices reach on your zone, you want to get a reaction. So if maybe it's a support zone, you want to see prices buy from your support zone. If it's a resistance, you want to see prices sell from your resistance zone, right? So if you want that, and if that's your main reason to why you're actually drawing the support and resistance zones, which I believe it is, then you need to actually be covering the most sensitive areas. And the most sensitive areas are the wicks, because what the wicks really mean is that prices at a time reached down here, but then it was rejected, and then prices was forced to close above it. So what does this mean? It means that prices, the pressure here was very strong, that prices were not allowed to close here, that they were forced to close above it. So that means this place where there's a wick, it's a very sensitive area that prices are being chased. Once they reach here, they're being chased, they're being removed, they're being forced to close above that. That's the real indication, or that's the real meaning of these zones, these wicks. Now, if you cover a body, what that means is that you've actually polluted your zone, because prices are no longer that strong in here. Like the reaction you're going to get from your zone if you cover the body, it's not going to be as strong as if you only cover the wicks. Because if you cover the body, it means you've also covered a place where prices are not strong enough to be rejected off the zone. You have also included parts in which they are not strong enough. There's no strong enough reaction to be rejected off. Like the most recent structure, if you remember how I drew it like this. Why did I draw it like this? Because I looked at these wicks on the most recent turning point, and then I covered all the way until out here. That's how I drew it. I covered the wicks of the most recent turning point. That's the way you need to always be looking at these support and resistance zones. You need to cover the wicks of the bodies, because in the wicks, that's where there is a lot of reaction, that's where there's a lot of pressure, and that's where prices are not allowed to be. So that means once prices come back down here, there's a great possibility that prices will be rejected off. And even if they manage to break below it, that means once they come back down here, it will only be a retest to continue going lower. But this zone will actually be very strong, very sensitive, because prices in the past have shown great deal of pressure, a great deal of momentum, that this is a great reaction point, and we don't like to be, we don't like to see bodies closing here. So that's the main reason why you want to cover the wicks. And that's how you actually draw the support and resistance zones, by only covering the wicks. Right. Now, support and resistance, drawings of support and resistances can can be done on all time frames. It doesn't matter the time frame. It can be from the monthly, weekly, daily, 4 hours, 1 hour, 2 hours, 3 hours, minutes, 30 seconds. It doesn't matter. As long as you follow the principles, cover the most recent, or draw on the most recent turning points, cover the wicks to get the most sensitive reactive points of the market, you should be good. You should be good. So with that being said, that's all I have to cover today on drawing support and resistances. If you have any question regarding support and resistances, please drop it in the comment. Let me know again, what else do you like me to talk about? If you'd like me to dive even deeper on how to draw support and resistances, please let me know. Don't hesitate. Turn on the bell notification so that you'll be notified whenever I release content like this in the future. And without further ado, guys, appreciate you all. Have a great time out there. Peace.